Victoria, Carolyn, and Jeff. Jeff.
I'm willing to make you the deal of a lifetime. I'm offering you 30,000 books at $30 per book.
That sounds like an excellent deal, but what's the catch?
There's no catch at all.
I will need to talk this over with my company's board of directors. I can't make any decisions for this company.
That's fair. I appreciate you for meeting with me today. I look forward to hearing from you soon. You have my card.
You're welcome. I'll give you a call in a few days. Bookmakers are offering to spot 30,000 managerial textbooks at a price of $30 per book. I need you to analyze our company's financial report and decide whether or not it'd be cheaper for us to take their offer or to make the books ourselves.
30,000 books at $30 per book?
Yes, the board of directors will be here tomorrow. Will you be able to have the information ready?
Yeah, I think I can do that.
I know I don't work for the financial department or anything, but I believe this may be a great way to cut out some of our variable costs.
You're right in a way. What will we do with the equipment that we use to make the books?
We can still use the equipment to produce other textbooks. If we have to, we can just sell that equipment.
We should probably just use it to make other books. And that way we can generate more revenue.
That's possible. Just analyze the report and we'll see what you come up with.
Okay.
Victoria has called this meeting because she has a proposal she would like to make.
Good afternoon, everyone. A representative from Bookmakers came into my office this morning and offered to supply us with 30,000 managerial textbooks at a price of $30 per book. James will present our proposal to you.
Last year, we manufactured approximately 30,000 managerial textbooks. We had a variable cost of $750,000 and a fixed cost of $750,000. If we purchase 30,000 textbooks from Bookmakers, none of the $750,000 of variable manufacturing cost will be incurred. The cost of purchasing our warehouse and equipment has already been incurred in the prior year and will not change. Those costs are considered our sunk costs. Since we will no longer be manufacturing the books in our warehouse, we could get rid of 2 of the current 3 supervisors employed. We will no longer need them. We could keep 1 to manage the books on the shelf in the warehouse. We would have a savings of $100,000. Now, the variable costs of $750,000 and a fixed cost of $100,000 can be eliminated if the books are purchased from Bookmakers. The cost of purchasing the books is $900,000. The difference is $50,000. With that being said, we would be worse off if we purchased the books from Bookmakers. We should continue to manufacture the books ourselves.
I see what you're saying, but what about the opportunity cost of using the warehouse to make other textbooks? I mean, are there any opportunity costs incurred?
Yes, our rent savings. Right now we're spending $70,000 per year to rent the back warehouse where we manufacture the books. We could save the money used for the rent. If we continue to manufacture books, we'll give up that rent savings.
So basically what you're saying is we would be better off if we were to purchase books from Bookmakers?
Yes, it results in a savings of $20,000.
Should we consider any other cost?
No, unless we can use the equipment to make other textbooks.
Yeah, maybe we can use the warehouse and the equipment to make an economics book. That would give us approximately an annual profit of about $80,000.
Therefore, our cost of savings would be $850,000 plus a profit of $80,000, which makes the cost of making the textbooks $930,000 versus buying it, which would be $900,000.
So basically, we should buy the managerial textbook instead of making them?
Yeah, because that way we'd be making more money.
But we would lose control of the quality of the books.
Yeah, but at the same time, we could use the warehouse to make new economic textbooks.
Yeah, you're right, but we may have supply issues. It's possible our supplier may not be able to ship the necessary amount of books in time for our customers.
I agree with you both. We will encounter the pros just as well as the cons with this deal. We need to come to an agreement and decide whether or not we're gonna accept the offer from bookmakers or buy them or make them ourselves.
The board has
All
met,
in favor?
and we decided to take your offer.
Great. I'll have my secretary fax you the forms. It's been a pleasure doing business with you.
You too.